Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a beautiful day. So in today's markets, guys, the bulls refusing to roll over and die, simply continuing their march forward, this time heavily led by QQQ to the upside. After having a rough start to the week, guys, big tech finally coming back with a day of outperformance, and that was matched by some gains in healthcare as well. The Russell getting some love too, up about 0.83%. Very decent day across the markets as a whole. Now, in terms of what we're going to cover in today's video, guys, we are going to go over some news that came out of RIVIAN. RIVIAN releasing their new product in terms of a new SUV coming in at around the $45,000 price range. So we're going to take a look at that release and how it affected the company stock. Company stock currently up nicely in the day after that news release rather. And we're also going to be covering some earnings from COSTCO and BroadCom AVGO. Then we're going to tackle our technical analysis on major indexes and lastly conclude with technical analysis on our big tech names. So without further ado, guys, let's get right into today's video. SPY up almost 1%, QQQ 1.5% to the upside, and the heat map looked pretty good on the day today. Big tech coming back, all except for Apple. Apple was actually up about 1% on the day at a certain point, but gave it all back in the last hour of trading, ending red once again, 7th red consecutive day for Apple trading. But the rest of big tech had a fairly good day, led to the upside by semiconductors, but Microsoft, Google, Meta, and Amazon all having very good days, and even Tesla getting some love here. The bottom half of the market performing somewhat decently, a little bit of consolidation in financials, and healthcare fairly mixed. So as a whole, guys, it was a fairly decent day on the market. Take a look at this comeback by big tech on the day. However, on the week, you will see that we are negative for a lot of tech names across the week. Amazon with a flat week so far, Google still down 3.25%, Apple down 6.5%, one of their worst weeks in recent memory. Meta's up nicely, but even Microsoft is still down on the week. So will they be able to recapture some of these remaining losses into the day tomorrow? That is what we're going to keep a close eye on here, guys. So before we get into our technicals, let's go over some news recap events. We're not going to cover the Jerome Powell testimony today. I listened in for a little bit and then watched the headline recaps. There was really no change at all, guys, in terms of the speech from Jerome Powell on the course of the day today. He was largely just answering questions from Congress, and in those questions, he didn't really provide any new information in his answers. So more of the same from Jerome Powell. I guess we'll just have to wait to see what he says on the March 20th meeting for the next interest rate decision that's coming up here on that date, March the 20th. So before we get into this, let's get into our new news headlines, shall we? So first off, guys, we're going to start off with RIVIAN. RIVIAN coming out with their R2 product. Take a look at what the stock price did after they released that product, guys. It's a very healthy day on RIVIAN, 13.5% to the upside and another 3% in the after hours. You can see when they started having this news release is when it really started popping here, roughly around 1:20 Eastern in the afternoon, and just had a cascading effect to the upside as the news was very well received by investors and the community alike. So what exactly did they release? Well, they released a smaller SUV than the ones they previously had. So RIVIAN obviously had two products already. They had this pickup truck, which retails at roughly $75,000, depending on your options. They also had the R1S, which is that model you see on the screen right up top. That is the 7-seater SUV. Passenger vehicle, of course, and now they were going to release the new R2 version, but hadn't yet shown what it was going to look like. All they said it was going to be smaller and more affordable. So here is your new R2 product, and as a matter of fact, guys, it looks quite decent. I'm not gonna lie, the truck looks very, very decent. It is smaller, and it does look somewhat similar here to your R1S model, but it comes in significantly cheaper. Price point is gonna be approximately $45,000 for this most recent model that they released today. But they didn't only release this one today, they came out with a surprise and released an additional model that they call the R3. So the R3 is once again a smaller SUV, this time with a bit of a sportback rear end design, which I very much like. And they released not only the R3, but the R3X, which is the sportier version of this one per se. I think that this one looks very good per se. Take a look at these images. This is your R3 model. So this, nobody knew that it was coming at all. So it was a very good surprise. The CEO of the company pulling pretty much a Steve Jobs after he was done with the R2 presentation. He said, wait, we're not done yet. And then he dropped these two additional models, namely this R3. And then a little bit below here, guys, if I scroll down, you can see the interior shots look very good as well. Double glove box. Definitely love that. If we can scroll down a little bit further, I'll show you the sport model of the R3. They call this one the R3X. Looks very good, doesn't it, guys? I'm very pleased with this report by Rivian, or actually with this investor day from Rivian, pretty much. Extremely good and well received by the community. A few of the headlines here compiled by Gary Black, which is a very well-known analyst, more specifically oriented towards technology stocks. Well, here's the headlines that he took away from the presentation here today from Rivian. So as expected, Rivian will launch a $45,000 R2 SUV that will compete directly with the Tesla Model Y. At that price point, Rivian will launch an even lower cost R3 crossover utility vehicle that we believe could be priced around $35,000. Both the R2 and R3 should be eligible for at least the same $3,750 off invoice EV credit as the R1S and R1T, the existing products have from Rivian, so eligible for the tax credit. Very good. Rivian will expand capacity at their Normal, Illinois plant to 215,000 units, which will allow R2 deliveries to be pulled forward to early 2026 from the end of 2026 that was expected. So this is very good, guys. Pulling forward their timeline by about a year. That is fantastic for the company. And now number 4, very big one, guys. Rivian will pause construction of its new Georgia plant. This was announced during the presentation today. They'll pause construction of their new Georgia plant, which will now focus on the R3 platform in the future. This will reduce Rivian cash burn by about $2.25 billion over an undefined period. And you guys know Rivian, obviously unprofitable so far. The big expectation after last earnings quarter was determining when is Rivian potentially going to run out of money. So it's nice to see that they're saving a little bit on costs here by pausing the construction of its new Georgia plant, which will exclusively be producing the R3s when they're ready. Probably about a year and a half out for that right now. So this is very good here, guys. Taken together, Rivian will now offer a full range of SUV, CV products. The R2 will start deliveries earlier, and the company can free up $2.25 billion of needed cash flow. Very good. And here's his video directly pulled from the presentation today. You can see the new R2 vehicle, which looks very good. Love that color, and I love the wheels personally as well. Big panoramic roof too. And here is your new R3. So this is the crossover SUV with the sportback design in the rear, which is extremely nice, guys. I'm a bit of a car guy myself. And here is the R3X, which is the sportier and more performant model of that R3 that we just saw. Nobody knew the R3 was coming, let alone that they were going to do something like this R3X. This one looks extremely attractive in my opinion. And if you guys want to know a bit more about this, guys, the one person that does a great job of promoting the Rivian brand, have to give it to him. It's a video from Marquise Brownlee. He's one of your largest tech reviewers pretty much on the YouTube platform as a whole. His main channel has about 20 million subscribers. So it's very nice that he's putting exposure out there to the brand. And for the most part, he's been a big positive proponent of the brand every time he releases a video on Rivian. And keep in mind, if you've ever seen Marquise Brownlee's videos in the past, he's very unbiased, guys. He just gives his opinion on everything and really doesn't sugarcoat anything. So when it's bad, it's bad. When it's good, it's good. And so far, he really likes the products that Rivian's come out with. So if you want to see his video, which was posted at the show, he was at this presentation here. It posted about 3 hours ago. You can see it already has about 220,000 views. So I'm going to be taking a look at this one later as well. So that's pretty much all the news for Rivian. Very decent product release day from them. Extremely happy with the way that presentation went. Now, let's get into our earnings cycle. So let's get into COSTCO stock. We're going to cover COSTCO first and then go over to BroadCom. So COSTCO, as a matter of fact, had earnings after the bell today, and you guys know COSTCO has been on an absolute tear as of the most recent couple of months, now trading before earnings all the way up to $7.85, but after earnings, guys, down about 4%. Now, nothing actually bad happened during the call. It's just that a lot of this move, guys, in terms of earnings, right, was kind of already priced into the stock. Stock is trading relatively rich right now in terms of valuation, so it's normal unless they were going to say something absolutely amazing that nobody expected, such as raising membership fees, which is what they did not do. Well, you could have potentially expected a little bit to the downside. So it's nice to see that Costco is only down 4% after such a tremendous rally here. Decent earnings from them, though. However, we did have a beat on EPS by about 2.5%, and they did have a slight little miss here on revenue, about 1.13%, which is what Wall Street was slightly disappointed in. Quick reminder for Costco, guys, this company is, one of the best in the game, ever increasing EPS every single year and ever expanding revenue every single year. Keep in mind, guys, this is a top line growth company, so don't expect to see some fantastic net margins. The CEO has said this a number of times. They are not a bottom line company. Their goal is to just be able to grow the top line revenue as fast as humanly possible and pass as much savings as they can onto you, the consumer, as they have tremendous deals with suppliers. So that is the business model for Costco. It is entirely about top line growth, not so much about the net margins. That being said, let's take a look at some of the headlines that came off the call. Costco misses holiday quarter revenue expectations despite online growth. This is true. So Costco on Thursday missed Wall Street's revenue expectations for its holiday quarter, despite reporting year-over-year sales growth and strong e-commerce gains. E-commerce gains, guys, on the quarter, 18.4% in the quarter compared with the year earlier. Just goes to show that their pivot to pushing customers more and more for their e-commerce sales online is indeed working. Sales on that division are up very nicely. More shoppers came to Costco and they spent more on their shopping trips during the quarter. If you guys know Costco, if you've ever been to Costco, guys, the parking lots are always full. And oftentimes I even go during weeknights because weekend days, are a bit crazy. And so I go at nights on the weekdays and still it's just packed every single day. Now, traffic increased 5.3% across the globe and 4.3% in the US. The CFO said on the company's earnings call, average ticket sales increased in the US and worldwide. So very good. Not only are more people going to Costco, but every time they go there, they're buying more and more things. So very good. Increase in foot traffic and increase in average ticket sales. Excessively good, guys. Inflation was roughly flat year over year in the quarter, said Costco, which allowed the retailer to reduce prices for some items. Very good. Costco coming out and saying inflation is no longer a problem. So you can take it from them, guys. They're pretty much one of the largest retailers in the world. So if they're telling you that inflation is not a problem, you have to take their word for it. For example, he said it's been able to cut the price of reading glasses from $19 to $17 and slash the price of 48-count Kirkland signature batteries from $18 to $16. Those are just two of the examples he gave. In the prior quarter, he said inflation was as much as 1% year over year. So really not a problem for them. The CFO said many new items in categories like sporting goods and lawn and garden will also have lower prices compared with a year ago because of falling freight and commodity costs. So once again, reiterating that it is not a problem for them. Very, very good. Now, a few things about the membership fees, guys. They have not increased the membership fees so far. So Costco has seen more membership signups as the company has cracked down on membership sharing. During the pandemic, he said the Warehouse Club noticed more people using their mom or dad's membership card and let it slide. Then he said the membership sharing grew because self-checkout made more common at clubs. So, are we getting some new signups from it? Absolutely, he said. Relative to the 60 or 70 million members, it's not terribly meaningful, but it's more fair and the right thing to do, talking about cracking down on the membership sharing. As a whole, guys, they did not raise the membership fees. Galanti said the company is not hiking the fee yet, though he added it's when, not if. So they could get a very decent boost from margins if they were to do it, but not opting to do it just yet. So let's take a little bit of a look into some Costco numbers, guys. And this company is extremely simple to analyze per se. So let's just take a quick look at some of their financials. Not going to spend a lot of time on this, guys, because it's pretty much more of the same from them. So here's your comparable sales for the most recent ended quarter. 4.3% increase in sales in the US, 9.2% here in Canada, internationally 8.6%, which is amazing, guys. Total for the company, 5.6%. And there's your e-commerce bump here by about 18.4%. Excessively good numbers, guys. take a look at their income statement right here. Here is your 5.7% bump in your revenue. Take a look at the membership fees, 8.2% to the upside. And keep in mind, they did not raise the price of memberships. So all of this increase is organic, meaning they have new members and more members. Very good to see there, which brings them a total revenue increase of about 5.7%, roughly the same here. Now, in terms of their merchandise costs, does the company have operating leverage? Is it increasing revenue faster than it's increasing costs? Well, I didn't write it down right here, but this increase is about 5.6%. So they increase revenue slightly, ever so tinily faster than they increase their operating expenses, which is very good. And even increasing faster than their selling G&A expenses, about 5.6% total there. So very, very decent. Net income, as I said, guys, it is not a bottom line company, so don't expect tremendous margins on these. So not a bottom line company. Once again, net income for this most recent quarter is about 3%, which is kind of in line with their historical average. It is a slight increase from the same period measured last year, which was coming in about net income of about 2.65%. So ever so slight net margin increase, but really nothing to call home about. Now, in terms of their balance sheet, does the company have low debt compared to their cash and cash equivalents? Yes, they do. So you can see cash and cash equivalents here sitting pretty much at about $10.3 billion between their cash and short-term investments. And then you have your long-term liabilities to offset that cash. So your long-term liabilities sitting at a total of about $10.9 billion. So the company really doesn't have any single problems with debt here, guys, right? Roughly the same amount of cash as the amount of debt on their balance sheet. So that is very, very good. Another positive for the company. Now, how much stock-based compensation do they do? You can see, guys, they really don't do a lot. This is only $580 million on total revenue, roughly, of about $58 billion for the quarter, right? So really small, guys, literally like 1.5% share stock-based compensation. That's excessively good, exactly what you want to see. And here is your free cash flow. They didn't do it themselves, so I had to derive it. Your free cash flow is just your cash from operating activities minus any capex, which is going to be additions to property and equipment here. So you can see that the cash flow, the difference between the two is roughly about $3.3 billion in free cash flow for the most recent quarter, which is actually one of their better quarters, guys. If you take a look here, we'll go through some of their past financials here that they had in the past, but it is indeed one of their better quarters here in terms of the free cash flow recorded. So I think their prior quarters, guys, are anywhere between, 5, 6, sometimes as low as 3.5. That's on an annual basis. Take a look on a quarter, guys. Quarter, usually between, if we get an average here, roughly about $2 billion in cash flow. Last quarter was pretty good at 3.6, and now they came out with 3.3. So very, very decent free cash flow by the company, guys. Pretty much, half of their annual free cash flow average already collected in just this quarter right here. So that's exactly what you want to see from the company. No problem at all. And then you did have some repurchases, ever so slight repurchases of common stock. So even though they don't pay a lot of stock-based compensation, they're reducing that amount even more by buying back shares here, which is very good. So overall, guys, nothing bad to say about Costco. Extremely solid company. You would be hard-pressed to find any red flags with this company as a whole. The brand is loved by many. They always report very decent financials. The problem with Costco is the valuation at current prices. So they have an EPS growth through 2027 of about 10%, revenue growth of about 6%. Their forward PE at the current share price of about $755 is 48.1. So this is the end of 2024 PE, 48.1. Fairly high. And then when you put that on a PEG ratio, when you divide your PE by your EPS growth rate, it gives them a forward PEG of about 4.9. That is excessively rich, guys, even more than Snowflake. It just goes to show you guys that there's two ways, right? There's only two single ways that a stock price can go up. Number one is if they raise their fundamentals by an equal amount that the share price has gone up. Number two is if the market allows it to trade at a higher multiple. And this is a case where option number two is happening. The market is allowing them to trade at a higher multiple, mostly because of how solid the brand is. Take a look at Costco's price to earnings ratio expansion here over the last 10 years. You can see that 10 years ago, they always used to trade in the mid 20 PE range. Then in the past couple of years, they were up to the mid 30 PE range. average. And so far, we're all the way up now to a trailing price to earnings ratio of about 51. So you can see this earnings multiple expansion. This is not driven from fundamental improvements. Yes, their EPS is going up 10% a year, but it's not substantial enough to warrant such a high increase here in your PE ratio. This is the market telling you that it's allowing the stock to trade at such prices, at such high multiples, because Wall Street just loves the stock essentially. So just keep an eye on that, guys. It's a bit disconnected from the fundamentals right now. Still would not be a short for me in terms of that, but I would not be surprised, guys, if eventually the valuation of this company does catch up to it a little bit and has a slight little taper off. Costco usually does this where it goes on insane 6-7 month bull runs and then consolidates sideways for a foreseeable time, right? So here you had 6-7 months of upside and then 6-7 months of consolidation sideways. A couple months of upside, consolidation, 6-7 months of upside, a year and a bit of consolidation sideways. So in my opinion, guys, it's going to be likely the same. We're probably going to reach a top here soon and then most likely just consolidate sideways as the company grows into this extended valuation that it's at right now. That being said, I wouldn't personally buy it up here. Right, I would be waiting personally for one of my for a better discount, but I can't lie, guys. Costco is still one of my favorite companies in the entire market. To be honest with you guys, I would probably put it at top 5 companies in the world right now in terms of, how much the brand is loved by consumers and how much they stand to grow from that alone. So that's pretty much everything for Costco. And now we're going to take a look at the second company that had earnings today. We had BroadCom, AVGO, one of the US's largest semiconductor manufacturers. Now let's take a look at how they did after earnings. Their stock is down about 3% in the after hours after they released earnings, but still leading into earnings, guys, they've had a tremendous year so far. Year to date, this stock was up pretty much 35%. So starting off the year very, very high. The company has high free cash flow. They have very high net margins. So take a look at this net margin expansion. This is a lot due to their acquisition of a company called VMware. So you can see before they acquired them, the company was only generating about 12 to 20% net margins. And since they've included VMware into their business, guys, their margins are all the way up, 39% year over year. And these most recent quarters, guys, have been closer to 40%. So that's very good. They have decent amount of buybacks. Their share compensation is not too bad. It's about 10% of revenue, which is kind of standard with a lot of software companies out there nowadays. So not really bad, but not amazing either. Now, they do have a medium amount of debt. They have just now consolidated that purchase of VMware, which they had to pay about $69 billion for. Half of that was in shares, and then the other half of that was was issuing debt to the tune of about $38 billion. So now they're sitting with a hefty amount of debt on their balance sheet, but the company does generate a lot of revenue and a lot of free cash flow, and they've started to pay that down. That was mentioned by the CFO in the call today. They're starting to aggressively pay down that debt with the free cash flow. That being said, revenue growth and EPS growth are not a problem for this company. 14% on both accounts right there in terms of EPS growth and revenue growth. Take a look at these nice curves right here, right? Very good EPS growth over the next 4 years and very good revenue growth, at least for the next 3 years as well. So no problems there with the company specifically. So let's take a little bit of a look into some company numbers, shall we? So here are the headlines. Revenue of almost $12 billion for the first quarter, up 34% from the prior year period. That's excessively good, guys. Cash flow from operations, $4.9 billion. Less CapEx is going to give them some free cash flow here of about $4.7 billion in free cash flow. That's a very solid quarter from them. Take a look, guys, at their prior quarters, and you'll see on average, the company tended to generate roughly the same, right? 4.6, 4.7, 4.3. So it's roughly in line with their last quarters of free cash flow. So decent on that basis right there. They repurchased and eliminated about $8.3 billion in stock, which they bought back over the past quarter, which is very, very good. $8.2 billion, a significant amount if you ask me. Fiscal 2024 annual revenue guidance of approximately $50 billion, including contribution from VMware, an increase of 40% from the prior year period. So this is your guide. So they had a nice beat, and then they also raised guidance. The guidance came in slightly above expectations. Expectations were about $49.8 billion. So nice to see them beat that ever so slightly by just a little bit. Here's some comments by your CEO. We are pleased to have two strong drivers of revenue growth for BroadCom in the first quarter in fiscal year 2024. First, our acquisition of VMware is accelerating revenue growth in our infrastructure software segment as customers deploy the VMware Cloud Foundation. Second, strong demand for our networking products in AI data centers, that's their semiconductor business, as well as custom AI accelerators from hyperscalers are driving growth in our semiconductor segment. So this company has two lines of business. Number one is going to be their software segment, and number two is going to be their data center, more specifically their semiconductor business, and both lines of business performing very, very well. Now, free cash flow, excluding restructuring in the quarter, continue to be strong. We have started to pay down debt. There it is, beginning with $3 billion to date in 2024, and expect to continue to pay down debt in fiscal 2024. Now, when I show you the amount of debt on the balance sheet later, guys, you'll see that it is a substantial amount of debt compared to what they previously have. Right, they were leading into this quarter roughly with about $39 billion of debt. And since that acquisition, this number right here is about $78 billion in debt. So the amount of debt is getting up there. It's good though, and on a yearly basis, they are generating 15, 16, 17 billion in free cash flow. I need to see them over the next few years use a substantial amount of that free cash flow to start paying down this debt. Because 70 billion, guys, is a little bit much. I know it's only 10% of their current market cap. Their current market cap is roughly 652. So it should be about, 10, 12% of their market cap, which is a little bit high. Need to start thinking about paying that down soon. Now, let's take a look at some of the numbers right here. Sorry if they're a bit small. Let me just try to blow this up for you guys. So in terms of their net income, we can see that their net income for the quarter came in roughly very, very good, even compared to their Q1 of 2023. Which is about 50.2% net margins. Here we only have about 44% net margins, guys. But anything above 40 is absolutely fantastic. Above 40 is above their previous quarter's averages, which is roughly, as you saw, 37 to 40%. So very nice to see them come in above that for this current quarter. Very good. Here's your free cash flow number. Had a nice little increase in free cash flow on a quarter-over-quarter basis here, measuring with Q1 2023 of about $760 million. Very decent free cash flow. Now, take a look at their lines of business here, guys. Semiconductor solutions, Q1 of 2024, the amount of sales, guys, is up about 4% on a year-over-year basis. And keep in mind, before VMware started taking more and more of their, more and more of their revenue streams right here, before the VMware acquisition, the semiconductor solutions used to represent 80% of their entire business, and infrastructure software only 20%. Now you see, although semiconductors has grown about 4% on the year, right? It only now represents 62% of their business. So good diversification. And look at this bump in infrastructure software from that acquisition, before only making $1.8 billion on the quarter, now all the way up to $4.6 billion. That's a 153% increase. Obviously, not all of that is organic. A lot of that comes from their acquisition. So the company's cash and cash equivalents at the end of the fiscal quarter were about $12 billion compared to $14 billion in the past. And that is just a testament to them having bought back a lot of shares over the quarter, and also the fact that they started paying down a little bit of debt. So their cash did drop. So very, very good use of cash for them. Now let's take a look down here at some of the numbers on their balance sheet, guys. Well, we're going to go over some of the numbers below, guys. It's a bit tough to derive some of their numbers here because they have a lot of amortization that they run because of their acquisition. And then they have a lot of one-line items as well. So the difference between their GAAP results and non-GAAP results is fairly substantial. So we're going to go over some main things here rather than doing the reconciliation between those two accounting standards. I'd rather present you guys with very easy to understand facts. Here's your stock-based compensation. We always look at that. So here's your total stock-based compensation expense for the quarter. It's standing at roughly $1.6 billion, which is a significant increase, guys. You can see that these three lines right here, here's your October quarter and January are the middle and last columns. Right here on the left is your most recent one. Look at this significant increase in stock-based compensation from not only last October's quarter, but a year ago's quarter. Fairly big increase from a year ago, guys. It's almost about a 4x. Now, I obviously realize that a lot of that is going to be due to their merger and acquisition and potentially paying the new executives that entered the company as well into that partnership. But still, $1.6 billion, guys, is a little bit rich. If you take it as a percentage of their total revenue, right? 1.6 divided by, let's just call it 12. It's about 13%. So not the best, but not egregiously outrageous either there. So that's a bit of information here on AVGO. Just want to reiterate, they do have a significant amount of cash and cash equivalents of about $12 billion. But look at their long-term debt here, guys. And this is a little bit of an issue. You can see after the acquisition, long-term debt sitting at about $73.5 billion, up almost 2x from what it was in the prior years. Or sorry, not even prior years, back in the October quarter. So this is largely a result of the acquisition. So I need to see them use that strong free cash flow to start buying down that debt. That's the only red flag for the company, in my opinion, guys, is the fact that they have acquired a lot of debt, but in turn, they've also gained a lot of equity from that merger, and they've also gained a new, a significant revenue bump increase from their software division. So that is always a plus sign. So that's just a few elements from AVGO. All in all, guys, a fairly standard earnings report, nothing fancy to see there. Revenue growth, as I said, EPS growth fairly good. It gives them, in terms of valuation, guys, forward PE at $1,400, which is roughly the share price here before their earnings. Roughly $1,400. The forward PE is about a 30, and then their forward 2024 PEG ratio, if you take your PE ratio and then divide it by your EPS growth rate, your forward PEG is about a 2.13. Not terrible, but still not the best in the industry. The best value at this point still remains a company like either AMD or TSM. They actually have better PEG ratios as a whole. So just keep that in mind here, guys. Nothing wrong with the company. I actually love BroadCom. It's just there hasn't been that much of a big dip opportunity to start buying them much since their November rally. So I personally am more focused on other companies such as AMD and TSMC personally. So with all that being said, guys, hope you enjoyed those earnings recaps and that RIVIAN recap as well. Now let's get right into our technical analysis, shall we? So before we do that, let me get a quick sip. And we're off to the races. So what we were looking for here, guys, we were looking out for, are the bears going to potentially get a daily downtrend in motion with a lower high into lower low flush? That did not happen here, guys. Big Tech had something to say about that today and came back with a vengeance. So at this point, guys, daily uptrend simply just continues. We are now beyond our most recent higher high. We are now targeting the current resistance area, which is the top point of the trend line. We'll see if we can run into that tomorrow. Roughly about $520. No red flags whatsoever. The bears once again losing their opportunity for daily downtrends into potential weekly consolidation. So if we are going to have weekly consolidation, guys, it's not going to happen. I told you it's not going to happen until we set a daily downtrend. If you don't have a daily downtrend in SPY, look at this entire chart. Not once since the month of October have you been able to set a daily downtrend. They tried it once here, double bottom, engulfing move, right? Didn't happen there. They tried it once here again. The bulls stopped them out, away from the low right then, and we just went back to a daily uptrend. Here, similar thing. The bears potentially had a chance with negative momentum and Apple falling off a cliff, still not able to convert. So your bulls remain in absolute full control. Just keep an eye on the top of the trend line. Now moving on to QQQ. QQQ, same analysis, right? QQQ, we're also looking out for the flush here, daily downtrend. And the bears were having to battle, through this 12 EMA as well. You can see how well we've protected this 12 EMA ever since the month of January, pretty much, and even leading back there prior to the November rally. Same analysis once again. Bulls remain in full control of this daily trend. We were not able to flush these lows. You can see double bottom right here before moving on to the highs. So at this point, guys, daily uptrend continuation is likely. We're going to be targeting the top end of the trend line at this point, which is roughly set right now at about $452. So keep an eye on this level for the foreseeable future. The bears will not be in control once again until we can set a daily downtrend and challenge the bottom end of this trend line. That is the only chance, guys, that the bears have to get an extended move and some extended weekly consolidation. Other than that, your bulls remain in full control of this weekly uptrend. Your weekly higher low is still set 422 on the dot. Now moving on to XLF. XLF also looking fairly decent, pulling back about 0.15% today, but they did put in a new high on the day. So at this point, guys, daily uptrend continues. Our upside target for resistance currently is sitting at your previous all-time high. $41 to $42 is going to be that range to keep a close eye on for XLF financials. The bulls just in absolute full control here, guys. any pullback at this point, just going to be for a daily higher low, anything above 39.95. Once again, just looking for a daily higher low for further trend continuation, and XLF and XLV almost have the same analysis, guys. The focus is on this 12 EMA. Look at this moving average. How many times have the bulls lost this in the past 4 months? Twice. And not one of those times were the bears able to convert into a new daily downtrend. So your bulls remain in full control. Now moving on to XLV. Healthcare looking fairly decent. Nice rotation to the upside, 0.47%. So same concept, right? We were looking, can the bears get the flush of these lows and send this into a daily downtrend? No daily downtrend on on healthcare ever since the past month of October. They had one shot right here. They cut the lows intraday and then engulfed the very next day for the following week. No daily downtrend in 4 months. So it has to be notable to you if ever it does happen. So far, not looking like it wants to materialize. The bulls once again setting the daily new uptrend right now, cracking your previous highs. So the next area of resistance at this point will be 148.21, your prior all-time highs. And weekly consolidation so far has been very healthy. The market in healthcare moving largely sideways, which is allowing them to cool down your RSIs here on the weekly timeframes. Even if we continue some sideways consolidation like this, even slightly negative, well, we're just going to be looking for a weekly higher low, anything above 137.26. And I've told you guys, if ever we do eventually have a larger form pullback, the likely area of pullback is going to be your previous all-time highs, talking about that 142 level. Now moving on to IWM Russell. IWM Russell, nice little day again, 0.83% to the upside, but struggling, guys, struggling to put in the same hard green candle closes like we had back here, right? Just kind of puttering around right now, but still have to give it to them. Daily uptrend still in motion by the bulls right now. The higher low is set with the low of Tuesday's trading. So at this point, any pullback, going to be looking for a higher low, anything above 203.13, higher low for further trend continuation. It's notable that now we are most likely going to close the second week in a row above our past 1.5 years worth of resistance, which is this red box right here. So looking very good, guys. Still, what I maintain, guys, is if we do get a larger form pullback in the markets, let's say mid-March, right around that FOMC decision, March 20th, I do believe that the likely pullback zone is going to be this big previous area of resistance, should now be acting as support. I'm looking for the breakout, retest of this range to be buying for the rally into 2024 continuation. But so far, so good. Your bulls are in full control. The only red flags happen, guys, if we lose Tuesday's lows right around here, right? If the market pulls back and cuts these lows, it will be daily downtrend. Then we'll be looking out for a weekly consolidation targeting this range right here, 201 down to about 195. Now moving on to the Dow Jones. Dow Jones up 0.34%, and the Dow Jones is in a thick battle. Proof, you can barely even see today's candle if it wasn't for this line, right? So today's candle right literally in this line right here. Why is this line important, guys? Well, because it's the previous area of 52-week high resistance, should now be acting as support. So let me put it back there. If I can find my hotkeys right here. So if I put it back, you'll see how important this line is. Now, we are still in a daily downtrend right now. The bulls are trying to put in a significant enough bounce to get back above this level, use it as support, and reset the daily uptrend. We'll see if they can make that happen. If, however, the markets continue to the red tomorrow, well, we'll just be continuing with this daily downtrend. At that point, we'll be looking out 38,460 for the lows, continue past the lows, and we are moving into further weekly consolidation. One thing that's notable on the Dow Jones is the fact that we're now trading below the 12 EMA, this yellow line right here. But you can see in the past, every time we've done that, guys, it's been a fairly quick recapture by the bulls. So at this point, I'd like to see the bulls recapture this 12 EMA here in the next few days, come back, sit on this as support, and use it to the upside. Everything looking good. And even on the weekly, guys, we've always been in a nice weekly uptrend right now, right? Your most recent higher low, since this was a higher high on the week, this is not your higher low. The most recent higher low is 37,151. So any consolidation, just looking for a healthy pullback, right? Potentially into your 12 EMA. If ever the daily bears do continue their march downwards, I'm expecting us to get a nice little area of support at the 12 EMA on the weekly, 38,100 roughly. So that's pretty much everything for your major indexes. Now let's get into your big tech stocks, shall we? So Apple, the price action on Apple was absolutely crazy today. And I noticed something into the end of the day that I haven't seen in a very long time, guys. there was a lot of play from algorithms into the end of the day. Take a look at Apple moving nicely up until about 2 o'clock. And then this is still normal price action, but this is when it starts to get a little bit weird. We're on the 1 minute chart right now. This is literally an algorithm smashing the bid, right? Just smashing the lows of the bid for darn near close to about an hour. So can someone very big potentially be selling? Usually you would associate this, guys. I used to see this when I was working on at the trading desk at the bank. Usually this is synonymous, guys, with potential iceberg orders, which just means that the source of the order is hidden and it's breaking up an extremely large order into fractions that can be put into the market progressively by an algorithm over a certain amount of time. So rather than selling $10 billion worth of shares at one price, they will kind of incrementally sell into all buyers for a specific amount of time. And that's exactly what that looks like on Apple. I haven't seen that for a very long time on Apple stock. So the first thing that came to mind, maybe a little bit conspiratorial or maybe a little bit of a conspiracy theory, but could that be potentially some of Warren Buffett's sales? Well, don't know, but that was a pretty big sell-off into the end of the day. And usually there's only a few people that hold that many Apple shares that they're willing to do that. When ETFs liquidate, they do not do that. That is specific to one individual or one institution. So curious price action on Apple. All that being said, none of those short-term factors matter when we take a look at the longer-term basis, right? Let's take a look at your long-term basis. Well, daily downtrend is still in motion. We are still looking for the bounce here, guys. And on the hourly time frame, we were looking, can the bulls get the hourly trend change? Well, the higher lows are still down here, 168.57. So we're trying to set a new hourly trend. The last hour of the day kind of took it away from us. So we will see, can Apple into tomorrow's trading set the new hourly uptrend? If they get the hourly uptrend, your daily bounce is underway. Then we look for the size of the bounce. And once again, the size of the bounce that we need for the bulls to be comfortable to recapture this daily downtrend to the upside would be a bounce to at least at this point, 175.75, which is a 50% retracement. And the best case scenario is if they can bounce all the way to about 177.50. If you can get up to 177.50, the bulls have a very good shot at creating a lot of space to set the daily high or low for daily trend change capacity. So looking forward to seeing how high this bounce gets on Apple when it gets started. That being said, we are still in a daily downtrend. We are as well still in a weekly downtrend for the bears right here. Your last support level in recent history coming up quickly, 166 is going to be that share price, previous all-time high, previous resistance, and previous support in your last fall sell-off here. So curious to see whether or not or how high Apple will bounce. And once again, the RSI, as we analyzed yesterday, is absolutely crushed. You would have to go back to 2018 and 2016 to find RSI as crushed as this on the daily. So looking forward to the Apple bounce. I am still fairly bullish on the company at these prices. Now moving on to AMD. AMD with another little day of outperformance here, 0.36% to the upside. So your daily uptrend simply just continues at this point. Look at how healthy this daily uptrend is. Your higher low is set right here, 199.68. So any pullback looking for a daily higher low for further trend continuation. In terms of price targets, as I said before, you really can't have any price targets, guys, because we have no overhead resistance. We're at all-time highs, right? Psychological numbers, 225, 250, 275, 300, and the likes. So looking good for the bear, looking good for the bulls. No real red flags just yet. The red flags arrive if we lose the most recent higher low and set the daily downtrend. That would be a loss of short-term from the bulls in favor of the bears. Excuse me. Wow. And now we would be looking out for a bit of weekly consolidation. And I've said, guys, this previous area of resistance right here, the top end of your prior daily range, talking about roughly 183, could be a decent little area if ever the bulls get tired and have to pull back to somewhere. That would be the likely destination, in my opinion. All things considered, though, AMD looking quite good. Now moving on to Amazon. Amazon also looking very good. 2% to the upside today. Still not able to get above the previous area of resistance, right? 2020, 2021 areas of resistance. And then beyond that is the all-time highs around 187. So we're still trading below it. However, it was a very nice day on Amazon nonetheless. We are still in a beautiful daily uptrend right now. Bulls will be looking to push through this 177 area of resistance right here and then move to new 52-week highs. That would just perpetuate this daily uptrend to the upside and would just keep your weekly bulls at this point in absolute full control, never losing the weekly uptrend, unlike Apple and Google specifically. So Amazon still looking very, very nice. Well, just keep an eye out, guys, on, once again, yesterday's low. If we ever lose yesterday's low before making new highs, daily downtrend is started at that point, and then we'll just be looking for weekly consolidation, anything above 165.93, healthy weekly consolidation. So we'll take this one day at a time on Amazon, but you guys know I'm looking to buy heavily if we come back down into the 160 range. Now moving on to Google. Google looking good as well. 2% to the upside. Google's bounce finally underway now. So after being stuck in this daily downtrend for a long time, we are just waiting now for enough of a bounce on one of these moves down to potentially signify that, oh, maybe we're approaching a longer form weekly bottom. How do you know that the weekly bottom is most likely set? You need to see a nice enough bounce here, recapturing the most recent downswing to give the bulls enough space to set up for the daily trend change. So that's what we're looking out for on Google. If you want it to be this leg right here, well, you need the bulls to get up at least as high on this one bounce, guys. We're almost there, 135.70, and then as high as potentially 136.75. If we can get as high as a 61, 62% retracement, it sets the bulls up nicely to potentially set the daily higher low off of any pullback and then reset the daily uptrend. And when we recapture that daily uptrend, guys, that is how you know your weekly low is set. And then we'll be looking how high can the weekly bounce get in relation to your most recent weekly lower high, which is about the 150 mark. So step number one is being initiated now. We need to see how high can this bounce get. If we can get all the way up to this previous resistance area, right? 141 to 138, it was previous resistance. It then acted as support. Now that we're under it, it should be resistance again. So if we can see something like this, rejection, pull back, higher low, and then smash through this, the bulls are going to be looking very pretty. That being said, if for ever which reason we continue in this rollover mode, let's say we lose the hourly time frame into tomorrow's trading and this daily bounce is finished, well, it's not high enough yet that the bulls have a chance. So at that point, it would most likely favor a rollover, and then we would be targeting lower support areas, talking roughly the 131, 130, and then it's all the way down, guys, 127 to 121. This green box right here is my extreme sweet spot for Google. It's when I really start backing up the truck for Google shares. As of now, still playing them aggressively in the mid 130 range. Now let's move on to Meta. Give me a quick second. So Meta, 3.25% to the upside, one of Meta's better days in the most recent month of trading after earnings. Looking very good, guys. Very simple analysis. A daily uptrend currently in motion. Looking very good. Daily RSI, not that overbought, but the weekly RSI is still considerably overbought. It has been that way ever since after earnings. That being said, your daily bulls are in absolute full control. Any pullback looking for a daily higher low above pretty much this low right here, 488, let's call it, which is also previous resistance, should now be support. And your 12 EMA is right there as well. So this is going to be quite a difficult area for the bears to flush. That being said, if they do flush this and end up with a daily downtrend into March, you guys know the drill. Just looking for higher lows on the weekly, anything pretty much above 455, looking for a weekly higher low for further trend continuation. Bulls just absolutely clobbering this one, guys. Monthly uptrend, weekly uptrend, daily uptrend, everything looking beautiful, kind of looking a bit like NVIDIA's chart, right? Now moving on to Microsoft. So Microsoft recovering nicely today, almost 2% to the upside. Microsoft getting caught a little bit recently, right? One daily downtrend here, then they got saved by NVIDIA earnings. They tried for the daily uptrend after that, didn't get it done, lower low, so daily downtrend is in motion. Now, once again, will they be able, like they did back here, to engulf this most recent selling leg? Or will we just set a higher low? We're right at these moving averages. Notice that the moving averages right now, if we get rejected from there tomorrow and head to lower lows, well, daily downtrend simply continues and weekly consolidation on Microsoft will simply continue at that point. Would not like to see them lose 397. 397 loss would be a weekly downtrend for Microsoft, and we'd just be in for a little bit of monthly consolidation. And you guys know me. If ever that happens, guys, if we lose 397, crucial level. At that point, I'm going shopping, guys. 380, 385. That is where I'd like to buy Microsoft. It's just going to be looking for a monthly higher low for further trend continuation later on into 2024. So any of these discounts, guys, are indeed for buying for the remainder of the year. So let's not squander them if they come to us. That being said, the bulls always have an opportunity, guys. If we V-shape this or bounce high enough, so far the bounce has been pretty good in one single trading day, guys. We're already up to about a 50% retracement. If we get a little bit higher, it sets up the bulls either for the V-shape, new daily uptrend after that, or maybe even two-step daily uptrend reversal. As a whole, bulls putting in a good amount of bounce. I just want to prepare you guys for the downside scenario if it happens, and just reiterate, it's a huge buying opportunity for the rest of the year if it happens. Now moving on to Netflix. Netflix looking good as well, 1.81% to the upside. Netflix really just holding this nice daily uptrend in motion. 12 EMA, look how nicely this 12 EMA has been playing defense for Netflix as well, pretty much since November, but especially after earnings, hasn't even lost it once since earnings, and earnings already now about a month and a half ago, right at this point, right? So daily uptrend simply continues. We probably got our daily higher lows yesterday and the day prior. So now we'll just be looking, can Netflix mount above this 620 level? Keep an eye on the 620 level. Fairly important, guys. We're there, 610 all the way to about 620 is going to be our last area of resistance before your all-time high. So we're still battling with that right now, but your daily bulls are in full control. The larger area that I'm happy we got over is 575. Big resistance line right here. We've now clearly mounted above that, so looking good. If for ever which reason, guys, we lose this into tomorrow and flush these lows, set lower lows, it would be daily downtrend. It would be weekly consolidation as well. And you guys know the drill, anything above 548, just a very healthy weekly higher low for further trend continuation. And now that we're above this area 575, it's going to be acting as outstanding support if ever we pull back into it. Now moving on to NVIDIA. NVIDIA, guys, just keeps on moving forward. I'm going to say the next area of resistance for NVIDIA is $10,000. No, in all reality, guys, the next area of resistance is most likely that $1,000 psychological level. It's going to be a very big level for NVIDIA. People are already screaming for a stock split. NVIDIA literally just did a stock split not too long ago, maybe about a year and a half ago. So very interesting for them that people are already calling for it. Makes sense with shares almost at $1,000 right now. You guys know the drill though. Daily uptrend right now. And I told you guys, as long as you don't see a loss of the hourly trend, look, they couldn't even lose the hourly trend, right? If you don't include this after hours trading right here, I'm not going to take it off, but let's say there's this candle and then there's the opening candles right here. You can see, where did they set the hourly downtrend? They didn't set the hourly downtrend. No hourly downtrend since this period right here, which was this area of sideways consolidation. So as long as we don't lose the hourly trend, guys, your bulls remain in full control. As when we do lose the hourly trend, then you look for, okay, how much of this move have the bears taken back? Have they taken back too much, setting up for maybe this? Or is it once again just going to be a shallow little bull flag before moving higher, guys? That is what we need to pay attention on. As of now, bulls in full control. Any pullback, look how much space they have, guys, above your most recent higher low, 773.53. They literally have, 17%. That's absolutely crazy. It means that NVIDIA can literally drop half of that, roughly 9.5%, roughly, 8.5%, 9.5% before, being even considered to lose ground to the bears. They can literally pull back 50% of this most recent move and still be set up nicely for a daily higher low and further trend continuation. Absolutely amazing for NVIDIA. Congratulations to all the bulls that are holding right now. Now, weekly uptrend is clearly in motion as well. Extremely overbought here, guys, but NVIDIA is no stranger to that. They stayed this overbought for pretty much, from May through July, so 2 months. So they can stay overbought like this for a while. No red flags as of yet. Bulls in full control. Now, moving on to Tesla. Tesla, a little bit of a rebound here today, 1.2% to the upside. Very nice move by them, but still the bears are in full control of this one. They had the daily uptrend. They lost the daily uptrend, which just means that your weekly lower high is set and on to lower lows. And the lower lows were actually set. We flushed the previous lows. We're on to new lower lows. So the bears are still in full control of this move at this point. Areas of support, we're in the area of support now. 180 down to 170 with a little spike all the way down to about 150s. Tesla, for me personally, I've said it as of the most recent few days of trading, guys. I am now lowering my target to play Tesla at. I want 165, 160, 155 to be playing any short puts. This is just a little bit too close for me, in my opinion, right now, because it's a cyclical business, guys. With Jerome Powell pushing rates back, and now, even rates for June are potentially getting unpriced and whatnot, it's just not a good time to be playing any single names that are sensitive to interest rates, guys. So that's, pretty much all of your EV manufacturers, solar plays, and companies with a lot of debt on their balance sheet. None of those companies will be performing well until we start getting underway into the rate cutting cycle. That being said, Tesla still just looking for a daily lower high at this point. The bears put in a heck of a move, so any move up should just be for a lower high for potential lower low conversion. Now, once again, we have to measure the size of this bounce. Obviously, if the bulls take back a lot of this bounce, 75, 80% of the bounce, they set themselves up nicely to change the daily trend. But as of now, your daily bears are in full control. We will keep a close eye on the size of this bounce, as the bulls just recently during the day recaptured the hourly trend. So we'll see how high they get. You guys know the drill. If the bounce is soft before rolling over the hourly, we're just going to continue to lower lows. Now moving on to Palantir. Palantir, very nice day again, 1.15% to the upside, but pulling ever so slightly back. Palantir was actually up on the morning, close to about 5%. So very notable to see them pull back, but we are coming in to our overhead resistance area. This whole zone right here, guys, $27.50 to about $28. Big area of previous resistance. So most likely that is where we're starting to reject to right now as the price tried to move into it into the morning. That being said, daily uptrend extremely healthy. If we do continue this consolidation here, anything above $23.50, just looking for a daily higher low for potential further price increase. Try to challenge that $28 level again. Then keep an eye, guys, this level right here, previous resistance should now be acting as some temporary support for your bulls if we do pull back into it. And also your 12 EMA will be curling up into that area fairly nicely. So nice area of confluence, guys, 25.45 for that area of confluence. And your weekly bulls obviously in full control right now. Weekly uptrend is absolutely gorgeous. And the weekly uptrend simply stays in weekly bull mode as long as the bulls control this daily uptrend. So everything looking good on Palantir. Now, PayPal still struggling on the day, guys, doing pretty much a whole lot of nothing, 0.65% to the upside, but you really can't tell since it was inside yesterday's trading candle. So we're still looking to protect this area to the downside, guys. 60 to 57, huge chop zone, as I've said in the past, right? We're looking to protect this. If we lose 57 and close below this, this will be a considerable break of structure to the downside. It will be a loss of weekly structure that we've tried to protect, guys, pretty much since the month of December at this point. So I need the bulls to hold this. That being said, we are currently looking to maintain this daily uptrend. The lows are here to protect 57.35. Lose that, you lose the daily uptrend. You set up the bears. Even if you get below this area, guys, these two yellow lines, you could potentially use this area as resistance and flush even lower. At that point, guys, I would be going shopping myself. $55 to around $54. PayPal still not mounting above our downtrending channel line right here, the top end of this channel line. You can see how hard they've struggled with this position in the most recent past, not able to break it for roughly the past 2 months of trading. We've been grinding close to it, still unable to break it. And now even on the weekly, guys, it sucks to say, but we're trading below our moving averages, these two lines once again below them. So if we lose these lows right here, guys, and close below 57, a weekly candle, it will be weekly downtrend started. And unfortunately, we'll just go back into more monthly consolidation before we find a true bottom on PayPal stock. The value is still good, but the technicals not looking the best right now. Still looking for that breakout. As I've said many times on the channel, this will only run extremely hard once we get a break and close above this trend line, which is currently sitting around $62. So need a heavy break, close above, retest this, and then run that. And only then will you get a run at least to about $75 is my first target. Then the next stop is mid 80s. So keep an eye on that for PayPal. So that's pretty much everything for today's video. We'll be doing the portfolio end of week recap tomorrow, guys. So keep an eye out for that one in tomorrow's video. And as a whole, hope everyone has had a very good day of trading. If you enjoyed the analysis in the video, consider dropping a like for me on the channel. Would really appreciate that, guys. and also consider subscribing to the channel if you're new here. Thank you so much to each and every one of you who take the time to subscribe to the channel and watch my videos. You've made this journey so pleasurable, and I can't wait to just continue the journey on with all you guys together. And lastly, guys, if you have any questions whatsoever, always feel free to leave me a question. I love your guys' questions. If you want me to look at a specific stock that I haven't covered, a specific earnings that I might have missed, some technical analysis, an options play that you want more details about, that you're thinking about, that you want potentially my input, what I would do in my own portfolio, because none of this is financial advice, of course, right? Just leave me a comment, guys, and I'll be happy to reply to you within the first 24 hours. So take care. I'll see you tomorrow after the close. Peace.